Hi, this is CF Liu, Independent Licensed Financial Advisor in Malaysia. In this lesson, I'm going to walk you step by step what are the considerations you should take into account to pay less tax on your rental income from your real estate property investing. Now, on top of that, you don't want to actually breach or break the tax guideline by Lembaga Hasil Dalam Negeri, which will actually get you penalized. You deduct something from your rental income that in order to pay less tax, and you deduct something you are not supposed to deduct. So let's get right into this. So rental income be treated as rental income, like investment income, which you need to declare under your personal tax filing. Or some people might say that I got a few property inside my property portfolio, can I actually treat this as a business income or not? Now, there's a few advantages why if you have a few property, then you probably want or thinking of treating your property portfolio, the rental income generated from that, and treat it as a business income, especially if you say that, I'm like full-time running this real estate agent, and I'm full-time also running my property investment, or you're full-time property investor. Can you actually afford to do that? Now, the guideline actually says that for your property, your rental income from your property to be treated, can be considered as a business income, you need to actually say provide your tenants, right? What we call as provide a services that maintenance service and whatever services that is expected of a landlord to provide that comprehensively and actively. Okay, I'll give you a clue. This is actually very hard to do if your property is a condo, apartment, or high-rise. But because the thing is, except you are owning the whole unit, the whole block of property, all the condos units, all the apartments on that block belongs to you, then it is impossible for you to fall under the definition of providing services to your tenants comprehensively and actively. Because let's face it, right? I mean, you can't, because you don't own the whole building, so you don't fall under that definition. So therefore, for most of you watching this, it will actually fall under what we call as an investment income, which is like rental income, which you can declare into your personal tax filing on top of your business income, and also your salary and all that. But so the other question is, you might wonder, like, hey, if I'm a Malaysian, I'm working overseas, then normally because I'm working overseas, right? You have work permit, you're working in the Middle East, so you actually pay tax over here. You work in Singapore, pay tax in Singapore. So, but you have like rental income generated in Malaysia, but normally you don't pay tax in Malaysia. You file your tax in Singapore for Middle East or overseas. So you might say that, there's no way for them to actually know I don't need to pay tax on my rental income from a property in Malaysia. Now, the fact is, you need to, because as a Malaysian, you need to pay tax on your rental income generated from your property in Malaysia. Now, similarly, if you are a foreigner, for whatever reason you are here already, if you manage to buy a property, let's say you are on a long-term stay visa, you bought a property in Malaysia, you actually then rent it out to others. Now that rental income is also taxable, right? If you are a foreigner, you are a non-Malaysian. But conversely, on the inverse, if you are a Malaysian, right, or a foreigner or non-Malaysian, stay in Malaysia, and then you have a property in your home country. For Malaysian, you have property in Singapore, you have property in Australia. So the thing is, you don't need to actually pay tax to Lembaga Hasil Dalam Negeri for the income derived from there, because unlike some countries like US, Australia is on global taxation kind of perspective. So you normally, the rental income, you have to pay tax on your rental income based on where the real estate property is actually situated. So the other thing about the taxability, the taxation on your rental income, is that if you are treating, for most of you are treating your rental income as an investment income, then your rental income will only be taxable, right, when a tenant actually first move in to rent your property. But if on a rare chances that your property portfolio can be treated as a business income, then the tax, from a taxation standpoint, that is calculated that is considered whenever your property is ready for occupancy. So there's a slight difference over here on how they define when to actually start what is the consideration in terms of the timeline. What can be considered as the income and expenses based on the tax perspective. Now the other thing is you might have a question to say that, okay, what are the expenses I could actually deduct against my rental income? And that's very important, right? Because you do incur a lot of expenses when it comes to property investing. What are the common expenses that you can deduct to reduce your rental income from tax standpoint, so you get tax less, or you don't need to actually pay so much tax, right? Legally, we are talking about legal tax avoidance over here, not tax evasion. So the very common one is, of course, your maintenance fee, your service charges, your maintenance charges, your credit rent and all that. And a lot of people are not aware that that the interest on loans, right? If you are paying the mortgage, every month there is this certain portion, not the entire mortgage repayment. Every mortgage repayment, every repayment that you do, there's this principal repayment, and there's another portion for this interest repayment. Now that interest repayment, if you really look at your statement and you actually sum it up together, and that is actually can be deducted against your so-called rental income. Now the other thing is, what about the expenses that is non-deductible, right? Expenses that is non-deductible. Now there's other expenses that are actually non-deductible, but before we actually jump to that, do you know that besides maintenance and service charges, interest on the loans and credit rent, there are at least 9 other common property investing expenses that you can actually deduct against your rental income, your gross rental income, right? To actually reduce your tax. Now, what are they? If this is important for you, I want you to leave a comment below and say, tell me CF, what are these other 9 kind of common expenses that a lot of people overlook, but because you are watching this, so I hope you don't overlook this. Now the other thing is non-deductible expenses. A lot of people thought that if I do a renovation and all that for my property, I improve the condition of the property, naturally you redo the floor, then that expenses you thought that is deductible. Now the thing is, if Lembaga actually really want to audit you, they have a very clear segregation between what is the expenses incurred on your property, investment property, that can be deducted, and what's not. If you were to actually incur, you were to change your floor so that it looks nicer, now that is not something that you can deduct, because this is called what we call renovation, or improving the looks and the value of those property, and that is not an from accounting standpoint, from tax standpoint, that is not expenditure in nature. So you really cannot deduct that. A lot of people don't know that, get into trouble, they cannot audit, and then they get into trouble. There's of course the other part of things, like whether you can engage agents and all that when you first rent out your property. Now it also cannot. If you first get your property, you want to rent it out, you buy some furniture, furnishing, IKEA furniture and all that, a lot of people do not know also that is non-deductible against your rental income. And so you say, what is deductible? Now the nature of your purchase has to be very clear cut. Now if a tenant actually damage your furniture and you're actually buying a new one to actually replace that furniture, now that is deductible. So the nature of that, you have to be very clear, because if the taxman were to actually done an audit on you really want to drill down on what kind of nature of this, because on a superficial level it might seem like, okay, you just change the floor, buy a new furniture, but is this a replacement, or is it like an initial investment to furnish the place? And that will actually determine whether your expenses can be deducted against the rental income you receive for that year or not. So don't get right into this mistake. If I know that I want to keep this video compact and short, so you really have to monitor and keep track of all that. If you have any question, just leave your comments below. Now if you like what you are seeing over here, you feel this lesson is useful, just really appreciate if you actually click like, and then you just support me by just click on subscribe, and get notified, get on the notification bell so you get notified when I publish more lesson like this. Now, before we wrap, I just want to tell you, you know, property investing, this is the hassle or the thing, accounting thing, taxation thing you have to contend with. Now, if you want to actually get away from all this hassle accounting kind of thing, you know, whether you have to hire someone or you have to keep track of what I just talked about in the past 10 minutes to actually, you know, see whether you can deduct or not, you know, how to actually optimize it. The very easy way is, if you want to invest in property, there's an easy way to invest into it. It's called investing in a real estate investment trust. Whatever rental income, dividend generated from there, basically is already tax-free. You don't even have to appear on your personal tax filing. Now, you say that, is this such a thing? Yes, there is. So, you know, don't be a skeptical Sally if you really want to know what is this asset class. You know, it's like a proxy to property investing, but it's even better because it's a commercial property investing, high scale, you know, high level kind of property investing. A lot of property investors actually, after they have a huge property, they actually say, screw that, I'm really fed up of doing all this, and I just want simple job, you know, straightforward, get my rental income, that's it, because that is what you want eventually, right? So I suggest you to actually check out this lesson here, you know, like here popping up after this screens, and just look at that. You know, it's totally free. You know, if there's something that you find useful in that lesson, to actually replace one of the best replacement, a liquid replacement, less hassle for property investing, just check on that, and you learn something new. And this is one of the best lesson in our channel. It has racked up, like, you know, the most viewed, one of the most popular video lesson in this channel. I want you to check that out. Don't miss out on that. This is Liu. I'll see you in another lesson.